Is Bitcoin about to have a major sell-off? Guys, welcome to Empire Trading Academy. Hit that subscribe if you have not already. Hit the like and let's get into this. Guys, for the past few weeks, we've had this big run up, right? We've had this big run up. We see on the RSI coming basically all the way from oversold to overbought. Little bit of a pullback, but we've gone pretty vertical on this, okay? All the way from our support of the accumulation phase, all the way above the 200-day moving average. That is a really good sign, very bullish, right? But we have been running into a little bit of resistance, and we are starting to see not as strong of movement, right? Now, why is that? So we do have major support up here. We have major support at 48, right? Because of back here and here as well. Okay, so we have that major resistance at 48. We are going to have major resistance at 50,000 as well, right? We have it here. We've touched that. We touched it, tried it here a bunch of times. And then that 50,000 really was after that first initial sell-off from the top. We retested that 50,000, and that confirmation of the retest of 50,000 as resistance after we broke it as support, that's what sent us on our way all the way down to 30,000. So we have our two major resistances there. Now, what about underneath? Obviously, we're staying above the 200-day moving average. Remember, this is the simple moving average, not the exponential. And when we were looking for the death cross of the 50-day moving average, simple to the downside of the 200, and also when we're looking for the golden cross of the 50 to the upside of the 200, you're going to need to look at the simple moving average and not the exponential moving average. Now, a little tangent, the reason why you don't want to use the exponential is because it weighs price action heavier the closer you are to our current candle. And so it can signal trends, and it can signal buy or sell signals too prematurely. Because you have this very violent move as it is very recently, right? On the exponential, if this were the exponential 50 and the exponential 200, these actually have already crossed already. And so that would have given a false signal as a major traditional buy signal in traditional markets. However, we need to use the simple moving average. That's what you want to use. And we have yet to cross to the upside and complete our golden signal there. Okay, guys. So we're holding that. Now, what about to the downside? Okay. Immediately, we have both. We've tested this. We have our 50%, not an actual fib level, but traders and investors tend to pull back to the 50 as well. So we do have the 44,000. Now, our next major pullback zone is going to be that 42,400. Okay, between 42,000 and 42,400, that is our next major pullback. If we cannot maintain that when we pull back to that, if we cannot maintain that as support, our next major move is going to be right at 40,000, and then if not, we're really going to that $37,000 to $38,000 range. Guys, I do not see this happening. I do foresee some sort of a pullback, whether it's from here at 48,000, or if we do make one more jump up to 50,000 before we have that pullback. But we do need some sort of cooling off period. We are getting this is relatively interesting because we are getting a cooling off period, right? But we're not, there really is no negative divergence. If we were to trace this out, it's very slight, okay? So yes, our subsequent moves upwards, right? Our higher highs, they are weakening just a little, but it's not really anything significant. So I do foresee some sort of a pullback. Now, if we do move up to 50,000, I would look for that pullback back to 45 or 45.6, possibly just a little bit higher where our 200-day moving average is. Okay, that 200, now that our price action is above that 200-day moving average, that's huge. It's huge. Now, I said in the live that I did earlier on TikTok today, I was hoping for a breakthrough in price action above the 200-day moving average, a retest of that, and then something like this green candle off of the 200 moving, at least up to 50,000. But we have gotten a lot of consolidation around this 200-day moving average. It's not necessarily bearish, but that is what I was looking for. However, keep in mind this area right between 48 and 50,000, there is just so much chop in between there. There's so much resistance in there, right? These are major psychological barriers, okay? So we are going to get a bunch of consolidation. It's normal that we get a bunch of consolidation, possibly some pullbacks before we do see this thing moving further. And then again, let's look out for this golden cross, guys, because we have flattened. Not only have we flattened out, this big move has helped to now move this thing upwards. Obviously, our 20, I would say virtually no matter what, if we get some consolidation, even if we were to have a pullback and then some consolidation, the 20-day is going to cross the 200. Okay, so that's a good sign. But our major signal that we're looking for is the 50-day golden cross above the 200-day moving average. All right. Now, on the live today, I got a lot of questions as far as not even questions, comments, and people just saying we're going back down to 30,000. We're going back down to 30,000. And keep in mind, guys, if we go back down to 30,000, every single model and every single metric is completely it's completely negated. Everything is void if we were to do that. Okay. And if we were to pull back to the 30,000, 100, we'll say 99%, we're going lower. If we pull back to 30,000 or 28.8, our support in this accumulation phase, we are going to see lower than that. We will break through this support finally and go lower. There's nothing that says if we were to, the momentum that we've gathered here, and if we were to just go right through the floor, hit our support here, there would not be enough. After this failed, there would not be enough demand to hold this again. And I do foresee us falling through that. However, I do not see that happening because of all on-chain data is still extremely bullish. Coins are not going on marketplaces. They're continuing to stay in wallets, and they're continuing to stay off of exchanges, being pulled off of exchanges. We have every single wallet size still accumulating, including whales, right? We have miners that are continuing to accumulate. We have the percentage out of the total percentage of Bitcoin holders. The percentage of long-term holders is now increasing over short-term holders. That is another bullish sign. If you look at stock to flow, last month, our last monthly knot, we went ahead to the upside, continuing the stock to flow model. That is still in check, continuing to give us confirmation of this bull run, right? There are so many things that are still bullish. 2013, we had this similar pullback. We had this similar consolidation phase in the middle of the bull run. And then we just basically went vertical from there and finished off the top, right? So these are the things that we need to look out for, guys. In this area right here, right? I would not be buying because we do not have, if you're dollar cost averaging and you want to continue dollar cost average, perfectly fine, go right ahead. But this would not be an opportune time to buy. I got a comment the other day saying, well, if you're bullish, I bet you're not buying. Those are mutually exclusive. Just because I'm bullish, it doesn't necessarily mean that this is the most opportune time to go ahead and go long, right? This is a very, very indecisive zone right here, okay? And this is the zone that we want to be looking for. Again, I would like to see some sort of cooling off, both on the RSI and MACD. The MACD doesn't concern me at all. Okay, we were topped out way higher, right? Almost 5,200, right? Right now on the MACD, just above 3,000. This doesn't concern me at all. We are weakening our strength just a little bit, but this doesn't concern me. A little bit of negative divergence on here, but there is definitely a positive if we were to have a little bit of a pullback or continued consolidation, because that would give us the gas to go ahead and make those higher highs and push right through 50. All right, guys. So hopefully that helps and gives you some idea of what we're looking at in the market right now. If you guys have any questions, let me know. Go ahead and message me. Check out our website also, guys. If you want to finally learn how to trade, if you want to leave your 9 to 5, if you're sick of your 9 to 5, if you're sick of only getting your paycheck as your only source of income, get another source of income, learn how to trade. Check out our website, guys. It's a super simple course, but gives you the entire framework and a super solid foundation of how to trade. I have an education background, and so I'm able to give you guys this that is really easy to understand and that you can put into practice immediately. So go check that out, guys, if you haven't, and we will see you in the next video.